In this discussion, we will discuss the discussion question of list and explain the steps to prepare a departmental income statement. When we see a discussion question or an essay question such as this, our goal typically is to expand on the answer to that question in order to pick up the most points. Typically with an essay question, if we add more rather than less, we're more likely to touch on the answers that are being looked for and pick up more points. More information is typically not something that's going to be taking points away. Typically, in a discussion question, we usually need to add more information, and expanding on the topic is the way to do that. Keeping that in mind, let's go through this again. List and explain the steps to prepare a departmental income statement. So the first thing we might want to do is we might want to take a step back and say, well, a departmental income statement is going to be managerial accounting as opposed to financial accounting, because financial accounting usually is not going to be breaking things up into departments. It's usually looking at the financial statements as a whole for external investors or creditors or something like that, external users, as opposed to managerial accounting looking towards internal users so that we can make internal decisions. In order to do that, we often take those kind of broad financial statement numbers and break them out and break the company up into different segments so that we can concentrate on different areas and figure out what to do within those different areas and be able to evaluate the performance of them to see where best to put our time for improvement. So in this scenario, we're talking about, of course, a departmental income statement. And by the definition of the departmental income statement, if we're going to list the steps for it, in other words, list the steps on how to create a departmental income statement, you may want to start with what is a departmental income statement. And of course, it's going to be an income statement broken down by department. So we're going to basically take a particular department, break it out, and put together, in essence, an income statement, timing account, performance accounts, revenue and expense accounts over a specific amount of time. Usually the departmental income statement is, because it being a timing account, is something we use to measure performance with. To prepare the departmental income statement, we usually go through a systematic set of steps that we're going to need in order to do so. First, we do kind of the easy thing that we can do if we have one department and we're trying to compare or create that department's departmental income statement. We can take the revenues and expenses that we can allocate directly to that department, figure them out first. In other words, the direct expenses, the expenses that we know are allocated to that department because they're incurred in essence solely by that department. For example, if we had like an employee that worked just for one department or supplies that were spent just on that department, then of course we know that those expenses are allocated specifically to that department. So that's going to be what we start off with. Then we're going to have those indirect expenses, the more complicated step, which are those expenses that are going to be applied to multiple departments. So if we're talking about our department that we're working on, and we're preparing a departmental income statement, we're going to say, hey, there's some expenses that are going to be joint expenses between multiple departments that we're going to have to somehow allocate to our department. We're going to have to take those expenses, those indirect expenses. We're going to use some type of allocation method, typically not just dividing it out by the number of departments, because the number of departments have different sizes or different uses of those indirect expenses. Usually we'll use a allocation basis, a ratio on which we will allocate those costs to the different departments. And then we'll allocate those indirect expenses. Now you would think that would be it, but the last thing we typically are going to do is we're going to take any service departments that we have, and those are going to be departments that are going to be services that are related to internal uses, and they're going to be used by multiple different departments. In other words, we're going to have, it could be something like maintenance or something like that, that is going to be allocated the indirect expenses that will then need to be allocated to the operating departments, the departments that are generating revenue. So all those service departments, then we're going to allocate the indirect expenses that are relevant to allocate to them. Then we're going to take the total of those service departments and allocate them to the operating departments. So if we're talking about a departmental income statement for an operating department, then we're going to have to, the last component will be to take those service department costs and make sure that we allocate them to the appropriate operating department. And again, we'll do that in a similar way as the indirect expenses. We'll use typically some type of allocation base if there's multiple departments that we're allocating to, the most appropriate activity base for that allocation.